What's up, everybody? It's Professor Rako here. Today we're continuing on with our Stockholders Equity chapter. What we're going to look at in this video is accounting for us issuing stock when we issue it with other securities. So what we're going to do here is we're going to issue common and preferred stock together at the same time for a lump sum. Okay. So what we're going to do here is we're going to start by doing this proportional method. And when we get to the bottom of the page, we'll use the incremental method. All right, so this proportional method, this should look familiar. So if you go back to your fixed asset chapter, you did like a basket purchase of assets. And what we did in that, if you remember, is you had to kind of get the relative market value of each of the assets that were being purchased. And then you allocated the lump sum that you received based on those market values. So this, if you remember that or look back at that, this should look similar to how we go about calculating that. All right, so the proportional method just means we know the fair market value for each class of security. Okay, so if that is the case, notice here it says allocate the lump sum received on a proportional basis. All right, so the first thing we need to do, well, let's read through it obviously first. We issued 10,000 shares of $5 par common stock. Fair market value is $12 per share. 10,000 shares of $7 preferred stock, par value preferred stock with a fair market value of 13. And we issue both of those for a lump sum of 300,000. So we want to allocate the 300,000 to common and preferred stock. Because you think about it, we're receiving 300,000. So our debit, when we get down and finally do our journal entry, we're going to have a debit to cash of 300,000. So we need to allocate to common stock and preferred stock a total of $300,000. So this process that we're about to do will help us get to that. All right. So the first thing we need to do is get the fair market value of each. All right. So I'm going to kind of start over here a little bit to the farther to the left, because then I'm going to put my journal entry over on the right when the time comes. All right, so the fair market value of the common stock is, we have 10,000 shares, and it says that the fair market value is $12. Okay, so that's 120,000. And the fair market value of the preferred stock, we do the exact same thing. It's 10,000 shares of that, and its market value was 13. Okay, so that's 130,000. All right, so my total fair market value is 250,000. All right, so if I have a debit of 300,000, so I can't just put I can't put common stock on for 120 and preferred stock on for 130, because then my credits will only equal 250, and I have a $300,000 debit sitting there for cash. Okay, so I need to allocate that 300 to common and preferred based on what proportion of the total fair market value each one represents. All right, so writing that out to get that, so common stock represents 120 of the total 250,000 market value, right? So a little bit under half. Okay, so that's when we say proportional method, this is the proportion. That would give you a percent of the total, so just under 50%. We take that percent and multiply it times our lump sum, which in this problem is 300,000. All right, so that gives me 144,000. And then I do the same thing for the preferred stock. It represents 130,000 of the 250. Multiply that, so just a little bit over half. Multiply that times 300,000. All right, and that gives me 156. All right, so remember, we're trying to allocate $300,000. All right, so I always just kind of do a quick check and make sure, yes, I did allocate $300,000. All right, you can probably just eyeball them to do. All right, so now let's do our journal entry. I actually have room down here, so I'll write down here. So we said cash. We were going to debit that for 300,000 because that's what we're receiving. All right, now look, we have common stock going on the books and preferred stock. But remember, common stock is going to go on at par value always, just like preferred stock. So we're issuing 10,000 shares of $5 par value common stock. So that's just 50. But up here, we said we're going to allocate 144 to that. So everything else just goes to our additional paid in capital common stock, or paid in capital in excess, like your book calls it. All right, so that means this number would be 94,000. Right, so there's my 144,000 for common stock. Do the exact same thing for preferred stock. The par value is 7, so that's going to be 70,000 here. We're allocating 156. So we'll do additional paid in capital preferred stock. for the additional $86,000. And once again, there's my $156,000, and we'll be done with that probably, right? So the proportional method is when we know both fair market values. We just allocate the lump sum to each class of security based on the relative market values of those securities. All right, so if we scroll down here, we're doing the same problem, but now we're going to do the incremental method. All right, so this is if the fair market value of all classes, okay, is not known. So if we don't know the fair market value of all of them, we have to allocate based on the fair market value of any class that is known. Okay, meaning if we only know one fair market value, we just have to use that one, and then we'll allocate everything else to the other security. Okay, so we're going to do the same thing as above, except the preferred stock, we do not know the fair market value. All right, so what that means is we still have our lump sum of $300,000. All right, so we still have our lump sum of $300,000. All right, the fair market value of the common stock is still $120,000. All right, so just let me scroll up real quick. I got it from up here, this $120,000. That's where that comes from. That has not changed. All right, so that means we are going to allocate to preferred stock the difference. All right, so instead of 144 and 156 that we did in the first one, we're going to do 120 and 180. All right, so let me scroll up just a little bit here. Now, look, I'm not going to rewrite out this journal entry, but if we just look up here at this journal entry, my debit to cash, that's still going to be $300,000. Common stock and preferred stock still go on the books at their par value. The only difference is now, since we have 50 here, all right, and we're allocating 120, this 94 would become 70. And down here, we'd still have this 70, which makes this 110 to get us up to the 180. So I'm not going to rewrite that, but you will just basically the only thing that would change would be those additional paid-in capital numbers because we're allocating a different amount to each. And remember, we still put them on at par value, and the additional paid-in capital catches everything else. Okay, so this is a when we issue with more than one security at a time, we can either use the proportional method or the incremental method. And then our next video we'll look at is what if we do if we issue it for something other than cash, and then we'll talk about issue cost, and then we'll move on to getting into treasury stock. All right, so stay tuned. We'll keep rolling on with this chapter in the next video. Hope you're enjoying it. Please subscribe to the channel. It does help me. Please share it with your friends in your class. Hopefully it will help them as well when they start getting ready for test time. Thanks.